Hi, my name is Joani Pemberton with Simply Vegas, and I'm going to do a little market update. Today is October 2nd, and I was kind of waiting for the September numbers to come out. They haven't come out yet, and I'll do a little market update after they do come out. But right now, I wanted to talk a little bit about the interest rates, and I'll get into the data on housing, the United States, or the bigger picture in a minute. But first of all, the mortgage rates right now, this morning or today, according to Mortgage News Daily, the 30-year fixed is 6.25%. And as you know, on September 18th, the Federal Reserve lowered the interest rate, or the Fed funds rate, by a half a percentage point. And they signaled 2 days ago, or Jerome Powell signaled 2 days ago, that if everything goes well, if the data looks good, by the end of the year, he will, or they will, lower the interest rate 2 more times, probably by 0.25%. So total, overall, if all goes well, the interest rate will be lowered 1 percentage point from last year. And I wanted to make something clear. People keep asking me, if the Fed lowered the interest rate, why is the interest rate, was the mortgage rate high? Well, the mortgage rate actually tracks not really the, let me backtrack there. The Fed funds rate is the rate with which the banks charge each other for overnight lending when they have to make sure that they have enough money in reserve, or how do I say it? Meet their reserve requirements. And so that's what actually that number is. And so with regard to the 30-year fixed mortgage, it really tracks the 10-year treasury bill, or treasury note, or treasury rate. And so you can see here on this chart where the 30-year fixed mortgage is in green and the 10-year treasury is in red, and the spread between the two is in blue. And so what happens is, as you can see, if you're looking at this chart, this goes back 10 years, with regard to the green and red, they somewhat track each other. And then here, the 10-year treasury bill really went way down. So it really don't track it exactly, but that's pretty much the common knowledge, that those two act in unison. But there is also a spread between the two. And right now that spread is 2.63%. And you can see that, like over here, in April of 2021, it went down to 1.34%. So nearly a whole percent. And so my point is that when there's volatility in the market, and in the real estate market in this case, the spread flips around. And so for whatever reason, it might just not be in the real estate market, the stock market, basically the overall economy, when there is volatility in the economy, then the spread kind of flips around. And right now there is volatility in the world with all of the stuff that's going on, and there's volatility in the stock market, and then there's volatility in those markets too, with regard to the presidential election that's coming up. And that's just kind of a regular, every 4 years, things get a little bit crazy. And so we're just kind of going to overlook the craziness right now and get through it until November. Okay, so next, I have in the past done a lot of videos with regard to new homes, because new homes are just nice. They're new, they're nice, they have all the up-to-date features, and they're just beautiful, I think. And I always learn something when I do these videos about homes, okay? And so anyway, I kind of wanted to go to that point, and I want to talk about how well the home builders are doing, I think. So I got this data from CNBC, and I wrapped it up in Data Wrapper, and this is the revenue dollars in billions of dollars, and starting with the highest amount first made, and this is from their income statement. Their income statement, this is going to be the first number on their income statement, the revenue that they made. It doesn't include, obviously, after taxes or after any kind of expenses, so it's just the top line number. And so, first of all, so D.R. Horton made $37.3 billion last year. Lennar made $35.8 billion. And Pulte Group made $16.8 billion. Toll Brothers made $10.5 billion. And NVR, they are a East Coast builder, and that's kind of the superior umbrella company for these 3 builders that they have. And I think they cover 15 states in the East Coast. Anyway, they made $10.1 billion. And then we have Taylor Morrison Homes, and they made $7.4 billion. And Meritage Homes made $6.5 billion, and so on. So I just kind of want to point that out, that the home builders seem to be doing well, in my opinion, from last year, okay? Even though the market's been a little bit tight, those are the ones that were selling homes, okay? And now we're going to go to the active homes on the market from August to August. I may have already said that the September numbers haven't come out yet. I believe they're coming out tomorrow. And so these are the active listings. So first I'm going to talk about the active stuff, and then I'm going to talk about the subsequent features. Okay, so these are the active listings, and I extrapolated this information from Realtor.com, and I wrapped it up in Data Wrapper. And so the active listings from a year ago, let's go to the highest numbers in Florida. They're up 66%. Their listings up 66% from a year ago. There's a lot going on there, as you know. There's like some HOA issue, and there are the weather issues too. And so that the weather is really kind of affecting all of these southern states, the southeastern states. And so like North Carolina, their listings have gone up 52%, South Carolina 47%, Georgia 53%, Alabama 42%. Let's see what else up here. Vermont is up 71%. And let's go over here, West Coast. California listings are up 41%. Washington State is up 49%. And I'm in Nevada. Nevada's down 2%. There's kind of a shortage of property here. I think it's because all these people moved here and there's not a lot of houses. And it's because these sports groups moved here. And all of the fans follow them. That's my opinion, because everything has increased in the last few years. The traffic has increased. The people, they're all over the place. And so I feel like it's like a mini California. A lot of people from California came here. So let me get back to the listings. So the active home listings in South Dakota are down 5%. And that's about it. So the only ones that are down are South Dakota and Nevada. Okay. And those are the listings. So you can kind of see. Let me open this up for you a little bit. This one is Indiana, is up 32%. So you can kind of see there aren't a lot of, I mean, it seems like things are moving. That was my point, okay? Their listings are going up, okay? And then here we have the median list price of the homes from a year ago. And the median list price here in North Dakota is up 9%. In Nevada, it's up 4%. In California, 0. Washington State, 0. Oregon, down 2%. And there's the list price again. And in Florida, down 7%. And so what's up here? New Jersey's up 7%. And the point that I'm making here is that the list price of the homes are going down. So that tells me that things are starting to move. That people are putting the homes on the market, and the list price, people are, maybe they're listing too high, but the prices are starting to come down. Okay, and that just seems kind of overall all over the United States. And then there's the neutral territory, what's kind of yellow, 0 and 0 for California, 0 for Washington State, Minnesota, and so on, Kansas. Anyway, so we're moving on to the next data point. And here again, from Realtor.com, wrapped up in Data Wrapper. These are the median days on market. So the median days on market looks like they're going up, okay, which represents things are taking a little bit longer to sell. So in, for instance, Maine, they're up 53%. In Florida, they're up 28%. Alaska, 27%. In California, the median days on market have gone up 12%. And let me see here, in Nevada, they've gone up 1%. So they're not really moving in Nevada, and they're not really moving in Kansas. They're 0 in Kansas, and they're 0 right here in New Jersey. And in New York State, they are up 2%. So there's still a bit of a struggle here in some states. Okay, and some states are moving, not much, but, you know, some. 18% up median days on market since last year for Texas, and in Arizona up 21%. Okay, so now we're going to look at the percentage of active listings with price drops, because I thought that was important. So price drops indicate that people put their house perhaps on the market for too much money, or maybe their house isn't in good shape and they have to drop their price to get it sold. And so right now, this is overall all over the United States. I can look at this also. This is Redfin, and you can go into their regional map if you wish, or regional charts, I should say. It does drill down, but for the purposes of this video, I like to look at the bigger picture. And so in the last year, prices have gone up people have been dropping their price 6.4%, and that's 1% from a year ago, which tells me that maybe the market's getting better. People are trying to get those houses sold, or 6.4% of them are, and so they're dropping their price. And a year ago, at this time, it was 5.4%. And so the next chart I want to show you also from Redfin is the median sale price. Okay, this is after the home sold. And so in this year, at this point, it's gone up 3% again nationwide, and then a year ago, it was up 3%. So things are going up. But you can see, I want to point this out, there's kind of the natural seasonal downturn, and so this happens every year. But anyway, sales prices are still higher than last year. That was my point, 4% higher than last year at this time. And so the last chart I want to show you is the weeks of supply, which is important. So 6 months supply is kind of equilibrium, where sellers are no longer have the market on hand, and buyers don't have a grip on it unless it's over 6 months. And so the 6 months is kind of the sweet spot, so to speak. And so right now, compared to last year, the weeks on market are 14.8 weeks, so almost 4 months, right? And so that's up 3 weeks from last year. Last year at this time it was 11.8 weeks, and so now it's 14.8 weeks. So that is actually improving too. So my feeling is, by looking at all these statistics, overall, it looks like the market's getting better, even though the interest rates haven't really flipped low yet. Maybe they will. But anyway, in my opinion, it looks like the market is getting better than last year, that's for sure, based on everything that I just showed you. So that's all for now. I'm kind of waiting for the September numbers to come out, and I'll do a little update then. So thank you for watching, and don't forget to subscribe to my channel and hit that notification bell if you want to be notified of any upcoming videos. Thank you.